You jacked your credit up, didn't you? And now you can't get approved for anything. But what's worse is it's costing you tens of thousands of dollars in interest fees. But don't worry, in this video I share with you 3 hacks that raised my credit score up to an 850 perfect credit score. Am I guaranteeing you that you're going to get 850 credit score immediately? No. But I know that if you follow these rules, you will increase your credit score by 100 points within the next 30 days. My name is Imani, and I am the Healthy Finance Coach, and my goal is to help you reach financial freedom through education, discipline, and a balanced life. Now, before we get into the 3 hacks, I want to educate you on a few things. What is a credit score? A credit score is what lenders use to see whether or not you are worthy of them loaning you money. So if you have a lower credit score, they're going to say no. And if you have a higher credit score, they're going to say yes, but they're going to say yes with a low interest rate, and that's where you save money. What does a credit score include, and how is it made up? This is what we're going to get into now. There's 5 parts to a credit score. The first part, and it's worth 35% of your credit score, is making sure that you make payments on time. Now, you're not robbing Peter to pay Paul. You want to make some smart financial decisions, and it takes discipline, but you always want to pay on time. Does that mean you pay the minimum? If that's all you have, but make sure that you pay on time. The second thing that makes up your credit score is what we call the utilization rate. This accounts for 30% of your credit score. So you definitely need to make sure that you're following this to a T. Okay? 30%. Let me break that down for you. If you have a $1,000 credit limit, only use $300 of it as a max. Do not go over that at any time. You want your utilization rate to be as low as possible. If you can, no more than 20%, but 30% is the max, and it does account for a good portion of your credit score. The third thing that makes up your credit score is the average age of your credit cards. Credit cards are what we consider revolving debt. What does that mean? That means that even if you pay it off, it doesn't close. You can keep using it over and over as long as you pay it off. Okay? So you definitely want to make sure that your revolving credit, your credit cards, the longer the time that you have them, if you've had them for 15 years, if you've had them for 20 years, 5 years, or whatever, you want to make sure you hold on to those credit cards. Do not close those accounts. It's very important that you understand that. If you haven't used your card in almost a year or getting close to a year, make sure you put something on your card. This accounts for 15% of your credit score. Now, when I say make sure you put something on your card, use it as your payment for your cell phone. You know you're going to have to pay that every month. Let it go to your card. That way it's always being used, because what credit companies will do is if you do not use your card within 12 months, they will close it, and that lowers your average age of credit. The longer the credit, the better. So that's important to know. The fourth thing you need to know that's part of the credit score is installment debt, and that represents 10% of your credit score. What is installment debt? Installment debt is something like a car loan or a mortgage. It's a loan that you take out, and once you pay it, it closes. It doesn't revolve like a credit card. You're not going to use it over and over and over again. So you want to make sure that in your credit profile, you have a healthy mix of credit. The last thing, and this is the one that hits a lot of people a lot of the time, because they want to be greedy and they want to keep getting credit cards when they really don't need credit cards because they haven't learned how to manage the credit cards that they have. That is hard inquiries. What are hard inquiries? Anytime that you apply for a credit card, the lender is going to pull your credit report. They have what they call soft inquiries, and then they have hard inquiries. Hard inquiries are when they are trying to make a decision to decide whether or not they're going to loan you the money, the credit, or whatever it is that you're taking out. This affects your credit score 10%. But people don't realize the more they apply for credit, the more it's dinging their credit score. And when you look at it, you're seeing your credit score go down 20 points here, 30 points there, and that stuff adds up. Always make sure that when you are applying for credit They do it at one time on one day. And the less, the better, especially when you're going for car loans. Sometimes they can be sneaky, and sometimes they'll want to see who'll give you the best rate or the amount of money that you need. They're running your credit multiple times, and it is dinging your credit score multiple times. So be very mindful of those. Those are the 5 things that make up your credit score. Very healthy mix. You want to keep that in mind. Now that we've gotten there, it's time for the 3 hacks that got me to where I am and over an 800 credit score, 850. One of the things that I make sure that I do, this is the first step. Every credit card that I have is under a 30% utilization rate. What does that say to you? That says that you go through all of your credit cards, and I know times are financially rough right now, but you go through all of your credit cards, and if you can reduce all of them down to under 30% utilization rate, you will see an increase instantly. 100% instantly, your credit will increase 60 to 100 points just by doing that one thing. It is key to always remain under 30% utilization rate. If you don't understand what that is, again, I'm going to explain it to you. It is when you have a credit limit, and this is an example, of $1,000, and you have used 300 of that $1,000. That is the max that you should use, okay? Do not go over that. Try to remain as low under that as you can. The second step that is very, very, very important, and this is what I think takes you above the 750 to 800. Make sure that you pay your credit cards off in full every month. What does that mean? That means you are not using your credit when you know you don't have money to pay for it in full. Credit is just supposed to be a handy way of making a transaction. It is not supposed to be guiding you through life and making transactions for you. This is how I need to help you understand what credit really is for. Credit is not to be used as money that you don't have. Okay? Credit is just to be used for the time being. That's it. Not money that you don't have. People are using credit cards as their own money, and it's not. Credit really is for emergencies, or if you're building businesses. You use credit, you make the money, you pay it back in full. But what people are doing is they're swiping, and they're swiping knowing good and well they don't have the money in their bank account. And it's causing them to go over. It's causing them to go over their 30% utilization rate. Okay? You don't want to do that. That's not something that you want to do. You want to make sure that whatever credit you are using, you can pay it back in full before the end of the month or maximum at the first of the month. You don't want to go past that, and you definitely do not want to go past your due date. It's not going to help your credit score. The last step that I have, and this is key to financial success, to financial freedom, is to discipline your mind to only use the amount of money that you know that you can pay back at the end of the month. It is hard. I understand. Times are rough out there. People are not earning what they used to earn. Everything has increased. Prices have gone up. I get it. But swiping a credit card is not going to make you feel better. As much as you'd like to tell me that it does, it's not going to. Because when you look at it in the end, you're going to be in the hole, and you're not going to be able to do the things that you want to do to live freely. So discipline your mind to try, if you can, use cash. Credit is key. You definitely want credit, but you want a great credit score, because let me tell you what great credit scores do. Great credit scores allow you to go anywhere and do anything on someone else's dime. It's your dime later on, but it's someone else's dime. So you can build businesses. You can get cars and homes and rentals. You can do all of those things without a second look. And the higher your credit score is, this is another secret. And I can prove this because I stopped working a year and a half ago, and I went and purchased a brand new car, and they never asked me for a pay stub because my credit was high. So it's very important that you get your credit in order. And if you need help getting your credit in order, you can contact me. I have linked my community down in the description. It's a community filled with people who are wanting to live a financially free life, but also build discipline, skills, balance, and education surrounding finances. The Money Reset Hub. If you found this video helpful to you, share it. It's very important that people understand what credit is, how to use it, and how to increase their current credit score. Even if your credit is bad, this works for everyone in all facets. If you have a 750 and you want to get over 800, if you have a 550 and you want to get over to 600, it's going to help you. But a lot of it is discipline. So follow me, share, and like this video so that we can send it out to the world and people can get in the best financial shape that they can regarding their credit. I truly appreciate you watching this video, and until the next time, take care.